Okay, so we refer to the example, comprehensive example. Okay, SBJ Berhad has been awarded a contract to build a playground and a recreation park at estimated price of 2 million. So this is contract price determined at the beginning of the period. Okay, so the work commenced on 1st July. So 1st July commence the work. Okay, July 17. Okay, and is expected to be completed. Okay, started here. So finish will be on 31st December 18. So this is finished. Okay, so the following balances have been extracted in the books on 31st May. So you close your accounts is here, 31st May, okay, 1918. Okay, so from 1st July 17 until 31st May 18 is about 11 month. Okay, 11 month. Okay, from 31st May to 31st December is about 7 month. Okay, so the contract price is for the for the whole project. So the contract price, okay, for the whole project, contract price is 2 million. Okay, for the price for the whole project. Okay, now you are required to prepare, okay, construction process for the end of 31st May. Okay, so that means your CIP is here. Okay, we have to prepare CIP here during this period. Okay, so this is your closing date. Okay, so this all the information given to you about the cost incurred for that particular period. So we have purchased from supplier the material 600,000 sent from store. So this is purchased from supplier. So that means go to the supply, go to the construction. Also this year sent from store. That means go to the construction. Okay, transfer to other side. To other side. That means take out from construction. Ini out. This one in, this two in, this one out. Okay, on site 31st May. So this is the carried down at the end of the period. Okay, wages paid. Okay, so accrued 31st May. So this is also carried down. Okay, and then site expenses paid. Okay, in paid 40,000, but are also accrued 31st May. So this is carried down. Okay, subcontractors paid. Okay, head office expenses, hire of plant, establishment charges, okay, the cost incurred. So machine and equipment at cost. So during the period, okay, you have machine and equipment purchased at cost 200,000. This is value of work certified from the architect certificate. This is cash received from contractor. That means the amount after you bill the contractor paid to the contractor, this amount 1.26 million. Okay, we refer to additional information. Okay, 10% of amount paid to subcon is incomplete work. So that means they paid earlier. That means they have prepayment. Okay, so subcon paid, okay, 60,000. So we have prepaid. Prepaid how much? Prepaid 10%. Okay, prepaid 10%. And then depreciation of machine. Okay, so machine you brought into the construction 200,000, but during the period you have depreciation. So the depreciation is 16,500. And then now the management estimated that the company needs future 404,000 to complete the contract. So this is the cost to be incurred in the future, not this accounting period. So that means for this period, estimated future cost is 404,000. Okay. And then we have rectification cost. So the cost that you have to rectify after the project is completed. That means if there is damage, so you have to rectify. The cost is 80,000. So 80,000 here at the end of the project. So should be future cost. Okay, rectification cost 80,000. Okay, then the company used the policy to recognize revenue based on cost basis. So cost, that means input method, as for the percentage of completion. So you are required to prepare construction in progress, prepare account receivable or contract accounts, and determine the amounts of contract asset or liability, and D, show the statements of financial position as at 31st May 2018. Okay, now we have to prepare CIP, okay, construction in progress, or construction in process for the year ended 31st May is not 2014, 2018. Okay, 2018, because we close the date here 2018. Okay, 18. Okay, so debit all the costs incurred. The first we have to record, okay, refer to your question is material purchased from supplier, material sent from store, okay, all is go into the construction, and then material transferred to other side, take out from construction, okay, out from construction is credit side 10,000, and then we have material on site carried down 20,000. So this is about material. And then we have wages paid 240,000, and then also accrued 12,000. So accrued means the cost incurred for this particular period but not paid yet. Okay, so that's why it's a carried down. And then site expenses paid is 40,000. Okay, also has accrued as at 31st May. That means still not paid yet but incurred for the particular period 16,000. So this is carried down. Okay, subcon paid 60,000. Head office expenses, hire of plant, establishment charges, okay, machine and equipment at cost. So these are to be debited the CIP. And then from the additional information just now, okay, subcon prepaid, okay, from 60,000, 10% is prepaid, so we have to credit 6,000. So 10% from 60,000. Okay, so this is carried down, prepaid. Okay, but we have to remember about the machine. Machine, okay, we put in the store, in the construction is 200,000. But during the construction, okay, from 1st July, okay, commencement of the construction, 2017, until 31st May 2018, there is depreciation. So at the end of the period, the value of the machine should be reduced. So the cost minus depreciation during the period. Okay, so this is the net book value at the end of the period 31st May 2018. Then finish recording. Okay, you total up all the costs, the debit side 1.1414 million. So the credit side also the same amount. And then you get the balance 1.194.5 million. So 1,194,500,000. 500,000, okay, is a cost of done to date carried down. Okay, so finished first stage. Okay, this cost of done to date carried down, okay, we transfer to the credit side, okay, as a balance brought down 1,194,500 ringgit. Okay, then we have to calculate the contract revenue. How to calculate the contract revenue? We base on cost basis. The percentage is based on cost basis. That means input method. Okay, calculate the percentage of completion. Input method means cost of work done to date. That means 1,194,500 ringgit divided by estimated total cost. Okay, how to get estimated total cost? Okay, cost of work done to date. okay, plus with estimated future cost plus rectification cost. So you get 1,678,500 ringgit. So times 100 to get percentage is 71%. So this is percentage of completion. How to get contract revenue? The percentage times with contract price. So contract price 2 million. So you will get here contract revenue 1.42 million. So put it in the credit side of the CIP, 1,420,000. So 1,420,000 total up here, minus the cost done to date. So you get the balance here. So this balance 225,500 is the contract profit. So finish the second stage. So the third stage is to carry down all the balances. Okay, so carry down all the balances that you have. Material on site carried down. So material on site brought down. Okay, subcon prepaid 6,000. Subcon prepaid brought down here 6,000. Machine and equipment carried down 180,500. So you have the balance brought down in the debit side. Okay, refer to debit carried down. Wages accrued carried down 12,000. So credit side brought down. Okay, side expenses accrued carried down 16,000. So we have brought down 16,000 here. So finish CIP. Then we have to record the contracting account. So contracting or accounts receivable. So it's the same thing, okay? Account receivable or contracting account. So how to record account receivable? We refer to the question. Okay, so the value of work certified is the progress billing. Okay, progress billing. Okay, so debit contracting, credit progress billing. But this question do not require you to prepare progress billing account. So this is based on value of work certified. And then we have to record the amount that contractee paid to the contractor. So how much the amount received from contractee? 1.2 million. Okay, 1.26 million. Okay, 1.26 million. So the contractor will receive, so debit cash, credit accounts, receivable or contracting account 1.26 million. So balance off, so you get balance 140,000 credit down. So this is retention money. The retention money will be retained by the contractee until the completion of the project. Okay, so this is B, account receivable. Now we have to calculate either contract asset or contract revenue. So contract asset or revenue first. Okay, identify the cost of done to date from CIP. You will get 1.1945 million. Plus recognized profit, you will get contract revenue. Minus progress billing. So progress billing just now 1.4 million. So you get balance 20,000 positive. So positive means contract asset. So this will be recorded in statements of financial position. So statements of financial position is D. Okay, requirement D, requirement to prepare statements of financial position extract. Okay, as at 31st December 2018. Okay, the first thing is non-current asset. Apa yang ada non-current asset is machine and equipment. So the cost, okay, the cost minus accumulated depreciation. So this is the first year using. So that means accumulated depreciation is equal to depreciation or 60,500. You get net book value. Okay. And then we have current asset. Apa di current asset? Okay, the first current asset will be account receivable or contractee. So the balance of contractee is 140,000. So 140,000. The next one, we refer to CIP. All the debit side balance will be current asset. All the credit side balance will be current liability. Okay, so current asset that you have, okay, stock or material on site, subcon prepaid, okay, and also contract asset. Okay, contract asset. Okay, current liability, okay, Just now we refer to the credit side of CIP. We have wages accrued, we have side expenses accrued. Okay, so if we have current liability, that means negative current liability, you put in the current liability as contract liability. Okay, thank you.